Walking into a storm, the Chancellor arriving in Washington today for meetings at the International Monetary Fund.
What happens after Friday when the Bank of England stop buying bonds?
What's the matter for the governor?
It's a matter for the governor, but the governor of the Bank of England says it's now up to investors to get their houses in order before Friday.
You've got 3 days left now. You've got to get this done.
Those words resounding through financial markets back in the UK, sending the pound tumbling. But these are just the latest lurches on a roller coaster journey no one is particularly enjoying. And for the UK at least, these bumps were exacerbated by Mr Kwarteng's mini-budget, which, says the fund's chief economist, complicated matters for the bank.
There was the sense that the budget, as it was announced, was suggesting a very stimulative effect in the short run, and something that would have complicated matters for the Bank of England's efforts to bring down inflation. And so that's something that, again, the details are now going to be coming out in a few weeks. We'll look forward to that discussion.
The clock, in other words, is ticking, both for the Chancellor and for markets. Because one thing we've learnt is that billions of pounds of pension scheme money was invested in funds which were simply not equipped to deal with these kinds of market lurches.
I think that a lot of people outside the pensions world have been quite surprised to find that so much kind of debt, if you like, has been accumulated by pension funds. So having a real problem in the government bond market has the potential to spill over into insurance company problems or bank problems. While I don't want to be kind of alarmist about this, there is the risk of contagion into all sorts of financial assets and real economy assets like houses and the like. So the bond market is actually very important.
That brings us back to the governor's comments. Following the mini-budget, the bank offered emergency support to the bond market, but that's due to expire on Friday. Will they change their mind? No one knows. It's a game of financial chicken. But the bank is playing tough. Shortly after the governor's comments, it issued a statement saying it is important that lessons are learned from this episode. But this is not just a game. Those bond rates determine the rates we pay on our mortgages. With 2-year fixed-rate mortgages now up above 6.4%, those taking out the loans face the biggest mortgage burden since the late 80s. Last time around, that led to a housing crash. This time, well, one day at a time. Ed Conway, Sky News.